Budget.
Hello everyone, this is Shalini Gera, Certified Financial Planner, and we welcome you to Through today's video, we aim to talk about the sectors that are going to get the benefit of Budget 2024. We'll talk about the pillars that the government recognized for creation of ample opportunities for all segments, and through these pillars, we'll identify the areas, the sectors, and indirectly the stocks that are going to get the benefit of the Budget 2024. A disclaimer, please do not construe this as a stock recommendation video. This is purely an analysis video from a fundamental perspective as to which are the sectors and which are the stocks which are going to get the benefit. Let's get started. First pillar that the government focused on was productivity and resilience in agriculture. The government focuses on enhancing crop productivity and at the same time developing climate resilient varieties of crops. The benefit of this pillar is directly going to come to fertilizer sector. So think of stocks such as Chambal fertilizers or Zuari agrochemicals. Let's understand why am I referring to these stocks. So here is a fundamental analysis of Chambal Fertilizers and Chemical Limited. When you look at the scores on durability, valuation and momentum, it gets a perfect 10 across all parameters. Specifically, dropping down to the balance sheet of the company, you can see that the company has been doing well since June 2024 in terms of its total revenue. There is certainly a drop in the revenue across the past 5 quarters as compared to the previous year. And when you drill down to the CRISIL report of Chambal Fertilizers, you see why there is this drop in revenue. So the dip in sales is mainly due to the fall in gas and commodity prices in the urea. Remember that fertilizer prices are highly dependent on subsidies as well as the prices of commodities. And imported fertilizer segment as well as the strategic decision to lower trading volumes of complex fertilizers due to downward revision in nutrient-based subsidy. So it's a very thought of decision by the company in order to reduce the prices of their commodities, in order to reduce the prices of the product being offered, which is leading to a drop in the revenue. But when you drop down to the net profitability, you can see that the drop in revenue has not so much impacted the profitability. The profitability continues to be on a positive trend. If you look at the price to earnings matrix, post July 2024, there is already a correction in the price to earnings, which means that a good momentum or a good rise from here is definitely possible, and the stock continues to demand a good momentum score as well. The second pillar that the government identified is employability and skilling. The government will focus on reimbursing corporates for their EPFO contributions for all new hires to the extent of 3,000 rupees per month. So more the employability, more the skilling, this is directly going to impact and create a positive impact on companies that benefit from consumption. So think of companies which are directly benefiting from the consumption impact, such as Hero MotoCorp, which is a leader in the manufacture of two-wheelers, or banking for that matter, which is directly going to get the benefit of increase in loan for purchasing more and more products. When you think of banking stocks, you're directly thinking of banks such as HDFC Bank, IndusInd Bank, which are currently at lower valuations and are also going to benefit from the sectoral rotation of the earlier sectors. The third pillar that the government focused on was manufacturing and services. Here, the government is giving an MSME push towards companies which are directly linked to the manufacturing sector. So the immediate sector that gets a benefit is consumer durable manufacturers. Think about companies which are in the business of manufacturing air conditioners or washing machines, such as original equipment manufacturers including Amber Electronics or Dixon. The next pillar that the government focuses on is PM Awas Yojana Urban 2.0, which is directly going to benefit the housing needs of more than 1 crore families. So through this impetus, the sectors that are going to get the benefit are urban housing and allied sectors. For example, Kajaria Ceramics, which is in the business of manufacturing tiles that are used by houses, and Bajaj Housing Finance and LIC Housing Finance. The fifth and final sector of this video is going to be the energy sector. So the government is giving a push to MSMEs which are transitioning from earlier sources of energy to cleaner sources of energy. So immediate sectors that are going to be benefited are solar energy sector, electric vehicle sector, hydropower, hydrogen power, and wind power. So companies that are directly going to get the benefit are Adani Green Energy, NHPC or National Hydropower Corporation. Here is an example of the fundamental analysis of Adani Green Energy. You can see that the company is benefiting from a good durability score, that is a good financial strength, as well as a high momentum score, but struggles with high valuation. So this is one key point which we need to watch out for. But if you look at and drill down on the financials or the balance sheet of the company is clearly benefiting from a rise in revenue considering the earlier quarters or earlier financial year. The company is loss making, but the net profitability is clearly on an increasing trend. The price to earnings matrix clearly is a concern because we are looking at near almost high valuations, much higher than the median price to earnings. So a price correction is definitely possible. From a fundamental perspective, from the benefits which are given by the budget 2024, the stock enjoys high momentum. So this was today's video on the sectors benefiting from budget 2024. I hope and do believe that this added value to your financial planning content. Please do let us know on what other financially relevant content would you want us to talk about. If you like this video, please do subscribe to this channel. We will be seeing you on more such financially relevant content. Till then, bye-bye.